Welcome back. Well, a good pullback is what we've seen, at least from the low point of the day. Adani Ports, Tata Motors, Tata Steel, they have seen a bit of a spike from the low point of the day. So that's pretty good news. And now, in fact, the Nifty Bank as well has pulled back a little bit from the day's low. Hero MotoCorp as well. Just take a look at that stock. It's currently moved to the high point of the day. So a bit of a fight. Let's see whether or not it can last. I'll tell you what, the 17,980 mark, that's a very, very important mark. So that's close to around 30 points away from current levels. Given that it's expiry and there is writing at 17,950, where the premium is 30 rupees, well, you add that 30 rupees to around 17,950. And that's telling you that the bears believe that that level is going to hold out. If the bulls can take the Nifty another 25 points high, I'll tell you what, we could see a quick 40-50 points, in the northward direction as well. So let's keep an eye out on that mark. But tire stocks, they are the ones that are zooming away today. Seat, Polo, Balkrishna Industries, all of them are gaining. As prices of crude as well as rubber, they have seen a bit of a contraction. Sonia rounds up all the action for those tire makers. Sonia?
Well, thanks for that. The tire stocks have been on the rise for two reasons. One, of course, demand is picking up across the passenger vehicle sector, but the other is the steep fall that we've seen in raw material prices. Apollo Tyres has hit a fresh 52-week high today. In fact, both crude and rubber prices have been at the lowest level that we've seen in many months now. If you track the prices, rubber prices are now down 24% from the April 2022 highs. Crude prices, as we know, are down 10% in just 2 days, which means that crude prices are now down 40% from the highs that we saw in June of last year. Now, crude and rubber together form about 70% of the raw material costs for tires. If you break it up, just natural rubber is 50% of the operating cost for tires, followed by which carbon black forms around 14%, and NTCF, which is nylon tire cord fabric, forms about 12% of the cost. Both carbon black as well as the tire cord fabric uses crude as a derivative for manufacturing, and hence there's an additional lower cost over there. Now, the margins of these tire companies have been on the rise for a while. In fact, if you just look at the trajectory of Apollo Tyres, the margins have been rising from 11.2% in Q4 of FY22. Now it's back at about 12%, and the expectation is that margins will improve further and earnings will pick up as raw material costs subside as well as demand gathers steam.
All right, Devin,